In the previous video, we saw the basics of cash flow statements. Now, let us see the three categories into which cash flows of a business are categorized. The cash inflows and outflows of a business are classified into three types, that is, cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Let us discuss each of these classifications in detail in this video. First, let us discuss cash flow from operating activities, its meaning, and what are the cash flows that come under this classification. Operating activities constitute all the primary activities for running of day to day business. All the activities involving inflows and outflows of cash that finally lead to generation of revenue for the business enterprise are categorized as cash flows from operating activities. The cash position generated from operating activities indicates the internal solvency level of the company. It shows whether a company has immediate availability of cash in case of a liquidation. It shows whether a company has enough cash flows to maintain the operating capability of the business enterprise. The cash inflows from operating activities include cash receipts from sale of goods, cash receipts from rendering of services, and cash receipts from commissions, fees, royalties, and other revenues. The cash outflows from operating activities include cash payment to supplier of goods, cash payments for operating expenses, cash payments of employee benefit expenses, cash payments to insurance enterprises for premiums, annuities, and other policy benefits, as well as cash payments of taxes on incomes, unless they are specifically identified as financing or investing activities. These items of cash inflows and outflows are related to the day to day operating activities of the business enterprise, and hence they are classified under cash flow from operating activities. Generally, transactions in relation to securities and loans are not classified under operating activities. However, if a company deals in either trading of securities or holding securities specifically for resale, or is in the business of financing and advancing loans, etc., then such transactions constitute the main revenue generating activities of the business, and the cash generated from such transactions is classified as cash flow from operating activities. So now we have seen what is cash flow from operating activities within the three classifications of cash flows. Now let us discuss cash flow from investing activities, its meaning, and what are the cash flows that come under this classification. Investing activities refer to transactions that involve acquisition and disposal of capital assets and other investments other than a cash equivalents. The cash flows from investing activities indicate the amount of expenditures made with a view to generate future income, and hence it is disclosed separately. The cash inflows from investing activities include cash inflow from sale of fixed assets, including intangibles and long term investments, interest and dividends received from loans or advances made, or investments in other businesses, cash inflow from repayment received of loans and advances made to third parties, as well as cash inflow from sale of shares, warrants, or debentures of other enterprises except those held for trading purposes. We have already discussed just a while back that when such instruments are held for trading purposes, then the cash flows from such trading is classified as cash flow from operating activities. The cash outflows from investing activities include cash outflows on account of purchase of fixed assets, including intangible fixed assets, cash advances and loans given to third parties, as well as cash outflow on account of purchase of shares, warrants, or debentures of other enterprises, except those held for trading purposes. These items of cash inflows and outflows are all related to fixed long term assets and other long term investments of an enterprise and are hence classified under cash flow from investing activities. We have now discussed what is cash flow from operating activities and cash flow from investing activities. Now, let us discuss cash flow from financing activities, its meaning, and what are the cash flows that come under this classification. Financing activities refer to activities that change the size and composition of owner's capital and borrowings of a business enterprise. These transactions relate to the long term funds or capital of an enterprise. This classification is important as it is useful in predicting claims on future cash flows through way of capital and borrowings. Cash inflows from financing activities include cash inflow from issue of equity shares or preference shares, cash inflow from issue of debentures, loans and bonds, as well as cash inflow from procurement of loans. Cash outflows from financing activities include cash outflow on account of repayment of amounts borrowed, cash outflow on account of interest paid on debentures, loans, and other long term borrowings, cash outflow on account of dividends paid on equity and preference capital, as well as cash outflow on account of redemption of preference shares and buyback of own equity shares. These items of cash inflows and outflows are all related to owner's capital and enterprise borrowings, and hence they are classified under cash flow from financing activities. So, these are the three categories under which cash flows are classified in the cash flow statements. In the next video, let us see how certain peculiar items are treated while preparing the cash flow statements.